Welcome to the deep dive. Today, we're really zooming in on Gen Z, specifically their financial lives.
Yeah, it's a fascinating area.
We've got quite a mix of sources to look at things like quick takes from TikTok, right up to detailed reports from the CFA Institute.
And some specific articles on financial literacy, too.
Exactly. So the mission here is really to give you, the learner, a clear picture of what's actually going on financially for this generation. Get past the headlines.
Absolutely. The TikToks give us that sort of ground level feel, the anxieties, the chatter.
Right.
Then the article digs into their financial know-how, or maybe lack thereof. And that CFA report gives us hard data on investing US, Canada, UK, China. So a pretty wide lens.
Okay, great. So let's dive in. A big thing that keeps coming up seems to be their starting point, financially speaking. It sounds like maybe a tougher climb.
That's definitely what the sources suggest. Yeah, a tougher climb. For instance, some of the TikToks mentioned a study showing Gen Z starts out with more credit card debt.
More than previous generations.
Seems so. And it's not just spending. It's tied to inflation, pushing up borrowing costs, higher interest rates,
Oh, right. That makes sense.
And there was also that TransUnion data mentioned online. It suggested people in their early 20s now are actually earning less than millennials were a decade ago.
Wow. Less. Okay, that's sobering.
It is, and you hear it in the comments on those videos too, people talking about wages just not keeping up, feeling like the economy is just difficult.
Yeah, so that's a double whammy almost. Debt up, relative earnings down.
Yeah.
And this pressure, I guess it connects to this idea of doom spending we've heard about.
It seems directly linked, when those big goals, buying a house, retirement, when they feel totally out of reach.
Yeah.
Well, some in Gen Z apparently turn to, doom spending on maybe luxury items, things for right now, almost as a coping mechanism for that economic despair.
Doom spending. It's a very evocative term. We saw a Bloomberg clip on TikTok referencing Credit Karma data. Something like a quarter of Americans admitting to it.
That's right, over a quarter. And even higher rates for millennials and Gen Z.
So what's behind that? What are the drivers?
Well, the Credit Karma report pointed to a few big things. Growing student debt, for one.
Okay.
The crazy housing market, those stagnant wages we just talked about, and just, the higher cost of everything.
Right, so it all piles up.
Exactly. And these sort of smaller luxury buys can feel like a bit of control or just, a distraction from worrying about the future.
Yeah, I saw that in some of the TikToks we looked at. People calling them little treats, like self-care almost. But there's also this undercurrent of resignation, like admitting they've given up on the traditional milestones.
That's the darker side of it, yeah. If I can't afford a house, I might as well have this nice thing now.
And that same clip did note that a lot of these doom spenders really have given up on those long-term goals. It's worrying. And does this connect to financial literacy levels? Our sources mentioned that's a concern, too.
A big concern, yes. The article we have specifically on Gen Z literacy, it cited a survey from the Global Financial Literacy Excellence Center.
Right.
Only about half of young adults, 18 to 27, were considered financially literate. Just half.
Wow. Okay.
And even worse, a find on our survey found only 24% of Gen Z could get 4 out of 5 basic financial literacy questions right.
24%. That's really low.
Right.
What does that mean in practice? What are the consequences?
Well, the article highlights the obvious risks, like piling up debt they can't handle, general financial instability.
Right.
But it can even affect their careers long term. One of the TikToks actually called Gen Z potentially the most financially illiterate generation yet, which is quite a statement.
Yeah, that really flags it as a serious issue. And the article mentioned where this gap comes from. Maybe not enough education in schools, relying on parents who might not be experts themselves.
Exactly. It can become this cycle where that knowledge just isn't passed down effectively.
But then again, Gen Z has this unique viewpoint, right? Being digital natives. Does that change how they see money?
It definitely seems to. They don't just see money as, earn and spend. It's also a way to connect, to share experiences online.
Oh, okay.
And that financial literacy article mentioned they tend to prioritize spending on experiences more than stuff. Maybe because they grew up seeing the instability around possessions during the Great Recession.
That's an interesting thought. And being online all the time must influence how they learn about finance, too. Social media seems key.
Absolutely key. One of the Wall Street Journal clips on TikTok pointed out that Gen Z, and millennials too, often trust financial advice from their peers online.
More than parents or professionals.
Yeah, often more than traditional sources. It shows the power of those online communities for them, which naturally flows into how they approach investing.
Okay, so let's talk investing. Maybe some questions about traditional stocks and bonds, but they're definitely comfortable with tech, right? So they're engaging somehow.
Oh, for sure. They're tech savvy. They know how to research online. That CFA Institute report had some really solid numbers here.
Like what?
Like 56% of U.S. Gen Z ages 18 to 25 owned investments back in May 2023.
Okay, 56%. That's more than half. Where's the money going?
Top of the list. Cryptocurrency. 55% of those U.S. Gen Z investors held crypto,
Wow, okay.
then individual stocks at 41%,
Hmm.
and mutual funds were third at 35%.
And the report mentioned they're more into crypto and NFTs than older generations like Gen X.
That's right. Definitely a higher tendency towards those newer alternative assets.
Makes sense given their digital comfort level.
Uh,
What kind of amounts are we talking? Is it big money?
The median investment for U.S. Gen Z was around $4,000, so not huge sums for the typical investor.
Right.
But the report did point out some gaps. Women and people of color within Gen Z tended to have lower median investments.
Right. Important context.
Yep.
And what's stopping the other 44% from investing? What are the barriers?
Top two, according to the CFA study. Number one, just not having enough savings or income, which, links back to what we discussed about their starting point.
Yeah, that makes sense.
And number two, a lack of knowledge about investing. That literacy gap again.
But clearly something is motivating that 56% to jump in. What's pulling them in?
Yeah, good question. A big factor is being able to start small. You don't need a fortune.
Right. Those investing apps help with that.
Exactly. And just their own curiosity. The CFA report found 65% of U.S. Gen Z investors said curiosity was a major reason they started.
And those apps, they seem really central, don't they?
Hugely central. The study found 65% of Gen Z investors use apps for managing or trading, way higher than millennials or Gen X. And a lot of them said the suggestions within those apps influence their investment choices.
Okay, that's interesting. The app itself guiding decisions.
Uh-huh.
And then there's FOMO, fear of missing out. Does that play a role here?
Oh, definitely. A big role. The CFA report said 50% of Gen Z investors admitted making an investment because of FOMO.
Half. Wow. What kind of investments?
Often crypto or individual stocks, sometimes those meme stocks you hear about. It really shows how much social trends and online buzz affect their decisions.
Yeah, you can see that. It also sounds like family background makes a difference too, whether they invest or not.
A very strong connection there, according to the CFA report. Gen Z investors are much more likely to have parents who also invest,
Okay.
and parents who actually talk to them about investing growing up.
So that conversation matters.
Seems to. Plus, they're also more likely to have received or expect to receive financial help from family, like inheritance or gifts.
So it's a mix of exposure, conversation, and maybe some financial cushion.
Yeah, that seems to be the picture. It's not just about them deciding in isolation.
What about actual schooling? Formal education on finance, does that correlate?
The report suggests it does, yeah. Gen Z investors are more likely to have had some formal financial education, especially at university or college level, compared to non-investors.
Cause and effect is tricky there, I guess.
Exactly. Does education lead to investing, or do interested people seek out education? Hard to say definitively, but the link is there. They were also more likely to have had some financial education in high school compared to older generations.
Okay. Now, what about their attitude? Their confidence? Are they optimistic?
Generally, yes. The investors, at least, tend to be pretty confident about their financial future and willing to take risks.
Why the risk tolerance?
Well, partly they just have a longer time horizon, right? More time to recover from any losses.
Sure.
But the CFA report also suggests it might be because they feel their generation faces such unique economic challenges. Maybe risk-taking feels more necessary to get ahead.
An interesting perspective. And you mentioned a link between gambling and investing in the report.
Yeah, that was quite intriguing. It found a correlation. People who gamble frequently were also more likely to invest in riskier things like crypto and NFTs.
Huh. So maybe a certain appetite for risk crosses over?
It could suggest that, yeah. For a segment of Gen Z investors, at least.
Okay. And finally, the report looked internationally. Were there big differences between countries?
Yes, some really interesting contrasts. Canada actually had the highest percentage of Gen Z investors, 74%.
Higher than the U.S.?
Yeah, U.S. was 56%, U.K. was lower at 49%, China 57%.
And Canadian Gen Z, What are they like?
They also had a higher median investment amount, about 6,750 US, and their top goals were things like paying bills and saving for travel.
Okay. What about the UK?
UK Gen Z investors were more focused on crypto, had a lower median investment, only around $1,600 US. Buying a home was a big goal for them.
And their confidence?
Lowest of the countries surveyed, actually. Least confident about their financial futures.
Interesting. And China?
Chinese Gen Z preferred mutual funds. Their median investment was much higher, around 18,000 US.
Wow, big difference.
Yeah. Travel was their top goal, and FOMO was a really significant driver for them. And opposite to the UK, they were the most confident group.
Fascinating how different the picture looks country by country. Okay, so let's try and wrap this up. This deep dive paints a really complex picture for Gen Z, doesn't it?
It really does.
They're starting out with more debt, relatively lower earnings, which seems to fuel things like doom spending for some. There's a clear financial literacy gap that needs attention.
A big one, yeah.
But at the same time, they are engaging with investing, often through newer channels like crypto, heavily influenced by social media, apps making it easy.
Right, and family background, education, those play really significant roles in who invests and how confident they feel.
And those global differences really highlight that context matters.
Absolutely. It's a generation navigating a pretty unique economic time, using digital tools, and kind of finding their own way in finance.
So here's something to think about for you, the learner. Gen Z is so tech-savvy, they live online, they get so much financial info there. How do we make sure they're getting good info? Accurate, unbiased, effective financial education. Education that actually empowers them to handle their specific challenges, build real wealth long-term, and maybe get beyond just the latest trends or social media hype.
That's the key question, isn't it?
Definitely something to mull over. Thanks for joining us for this deep dive.